Thanks for joining us here at Kalkine. I'm Rose Jacobs. Canadian investors looking to capitalise on the current market inefficiencies can explore quality value stocks like TorontoDominion, Maxar, goeasy, BRP and GFL. Canada's main stock index contracted by approximately 8% this year as the macroeconomic tensions continue to pressure investment sentiments worldwide. However, value investors can consider dividend-paying stocks supported by healthy business operations and future prospects to capture long-term gains. The 5 TSX value stocks are available at a bargain price and could offer quality returns. So let's look closely at the financials and stock performance of these TSX stocks shortlisted by Kalkine Media. Number 1, TorontoDominion. TorontoDominion Bank announced a definitive agreement to buy US-based financial service provider Cowen on Tuesday, August 2nd, for a cash consideration of US $1.3 billion. The Canadian lender believes that this strategic deal would expedite its US growth plans and enhance its business capabilities if completed. TorontoDominion saw its top line increase to $11.26 Canadian billion in Q2 of 2022, higher than $10.22 billion Canadian dollars in Q2 of 2021. The $149 billion market cap bank reported a net profit of $3.81 billion in the latest quarter, relatively higher than $3.69 billion in the same quarter 1 year ago. The TD stock plunged by roughly 15% year to date. Number 2, Maxar Technologies Inc. Maxar Tech is a mid-cap company providing space and geospatial intelligence solutions to commercial customers and governments. Maxar recently announced a quarterly dividend of $0.01 US to be paid on September 30. The space tech company recorded a return on equity of approximately 16%. The ROE measures the company's financial profitability by dividing its net earnings by equity. The Maxar stock jumped by almost 12% in 9 months. As per Refinitiv data, this space technology stock appeared to be on a medium to high momentum as Maxar saw an RSI value of 60.53 on August 3. Number 3, goeasy Limited. goeasy signed a strategic partnership and investment agreement with online car shopping and door delivery platform Canada Drives in late June. The credit service company said that under this agreement, goeasy would acquire a minority equity stake of 40 million Canadian dollars in Canada Drives. The small cap financial service company doles out a quarterly dividend of 0.91 Canadian dollars. On the financial front, goeasy posted revenue of $232.14 million in Q1 of 22, relatively higher than $170.17 million in the same quarter of the previous year. The GSY stock spiked by nearly 17% quarter to date. Number 4, BRP Inc. The mid-cap vehicles and parts firm BRP successfully acquired a Great Wall Motor subsidiary to strengthen its knowledge in electric motors, inverter hardware and software. The Canadian automotive firm slightly increased its revenues to Canadian $1.809 billion in Q1 of 22 relative to $1.808 billion in the same period of 21. BRP delivers a quarterly dividend of 0.16 Canadian dollars. As for its stock performance, the DOO stock zoomed by almost 20% quarter to date. According to Refinitiv data, BRP stocks held an RSI value of 61.88 on August 2. And number 5, GFL Environmental Inc. GFL Environmental is a large cap company providing various waste management solutions ranging from solid and liquid waste to infrastructure and soil remediation. The industrial company saw its revenue swell by 40.4% year over year to $1.7 billion in Q2 of 22. GFL reported a net profit of $64.3 million in the latest quarter, up from $62.5 million posted in the second quarter last year. GFL Environmental also revised its revenue forecast range to 6.42 billion Canadian dollars and 6.47 billion for fiscal 2022, higher than the previous range of $6 billion and $6.1 billion. This waste management company also disbursed a quarterly dividend of US $0.012. The GFL stock climbed nearly 8% in the past month. So the bottom line is this: the TSX stocks mentioned above have recorded increased revenue in their latest quarter and could fetch significant value in the long run, considering their current price levels. In addition, these Canadian companies also pay dividends and can offer passive income. Stock market enthusiasts must assess their risk-taking capacity before investing in stocks. For more info, take a look at the website kalkinemedia.com. I'm Rose Jacobs. Thanks for joining me today.